Hello viewers. So you are decided to invest in US top-notch blue chip companies. What are these companies? These companies are very big companies. There are 500 top-notch US companies. This is called S&P 500. Let's have a look on the performance or the size of these top-notch companies. Here is something for you. 500 companies that form the index called S&P 500 includes top-notch 500 companies in the US. Just to give an example of how big these companies are, I'm showing you you can see on my screen 15 top-notch companies, and some of their companies, they have the budget which was greater than the budget of many other developed and developing countries. For example, look at this list. Now you can see in front of you. Walmart, for example, in 2022 posted a revenue of $573 billion. Amazon, $514 billion. ExxonMobil, $413 billion. Apple, $394 billion. United Health Group, $324 billion. Berkshire Hathaway, $302 billion. Google's Alphabet Incorporated, $282 billion. Nvidia Corporation, $269 billion, and so on. So these are the 15 companies that are part of those S&P 500. And if you look on any ETF that is investing into S&P 500 index, although they are investing in 500 companies, but their top 10, top 12, top 15 companies are always these companies that you are seeing on the screen at this time. So at least 20 to 30% of their investment goes to these top companies. So now question comes, and the question is very simple, that what kind of ETF should you invest? Of course, one option is to invest in buy shares of each and every company, but that's too tedious and it's too expensive. I don't know if you have that much money, but the best way is to be part of an ETF, the ETF that invests in these 500 companies. So there are 4 types of ETFs, but which ETF will you pick depends on your situation, your financial situation. However, before presenting you those 4 ETFs, I would like to mention here that I'm not a financial advisor, and this video is for entertainment and information only. Please do your research before investing in any of those ETFs. This is just for information, and it's not a paid program. I'm not getting any commission. It's just my research, my own interest. There are 4 ways to invest into S&P 500. First one is XYLD ETF offered by GloboX financial company. Yield is 11.5%. Second is JEPI, which is JP Morgan Equity Price Index, invest into S&P. Yield is 10.9%. Third is XYLG ETF offered by the same company GloboX, and the yield is 5.3%. And the final 4th one is VOO, very famous Vanguard ETF, invest into 500 S&P 500. So let's start with XYLD. XYLD is offering you 11.5% yield because it follows an active strategy. This is an active fund. What is the active strategy? They write call option to generate premium. But to generate more premium, they even go with at the money call option strategy. They write 100% of their securities at the money call option strategy, and that's how they generate more premium. Although they generate more premium, and that's how they manage to pay higher yield, but there is a downside. And the downside is that at the time when the contract, a covered call contract, is going to materialize, if the price of the securities are higher, so then this ETF loses all its securities and has to buy at a new price, at a higher price, again S&P 500 securities. That could generate a downside for the capital growth or maybe to capital erosion. So if you are interested in more income and is ready to accept a little bit of a decline into your growth of the price growth of your ETF, then that could be a way to invest into S&P 500. The second ETF is from JP Morgan. Yield is 10.9%. The strategy is similar. It is an active fund similar to XYLD. However, there is one little difference. And the difference is that when they write covered call options contracts, they do it 80% of their securities. And the 20% they write equity link notes. But they also do out of the money covered call contracts. So not at the money. So as opposed to XYLD, they generate less premium compared to XYLD. Although they write out of the money and generate less premium, there is a downside. And the downside is the risk associated with the equity link notes. And the second downside is they still have limited growth, because if the market is performing good over time, they have to sell their securities at the price they have agreed on and then buy at a higher price again the securities. Third thing is they don't do all 500 securities, all 500 S&P 500 index. They buy 120, 125 of those securities, and then they do S&P 500 through equity link notes. So again, if you are interested, if you don't want to go for an ETF that does at the money covered call contracts, you can go JEPI, and JEPI will provide you out of the money covered call strategy. The third one is XYLG. This is ETF offered by X. The difference between XYLG and XYLD is that XYLG does covered call contracts only 50% of their securities. So if an investor is interested in having some yield, regular yield every month, and also price growth in their equity, so that's suitable for those types of investors. Other than that, it is exactly the same strategy. It does covered call contracts at the money, but only on the 50% of the securities. So there is modest growth potential in XYLG compared to XYLD. Finally is the Vanguard ETF, VOO, or we call it VOO. It is a simple index that invests into all 500 top-notch US companies, S&P 500. Its yield is only 1.5%. And it doesn't write any covered call options contract, doesn't have any other strategy, just to invest. So you will expect potential for growth, and whatever the price growth for the S&P 500 companies that price growth is reflected in your ETF. But there is one thing for my Canadian viewers who are viewing it. If you buy any of these 4 ETFs in your RRSP account, then you will not be paying the withholding tax, which is around 15 to 20%, I guess, because these are US funds. But if you are buying it for your TFSA or your other personal account, these 4 US ETFs or any other US ETFs or any other US security which provides your yield, they will be withholding tax. There is one more important factor that my Canadian friends should note, and that is about the currency movements. The risk of attached with the buying of these US ETFs is that if at the point when the Canadians are buying these ETFs, and if the currency is depreciated, means Canadians will be paying more Canadian dollars to buy lesser US dollars. And that's why their purchase for these ETFs would be expensive. And if the time when Canadians are selling these ETFs or the securities and the Canadian dollar is appreciated against US, so then they will receive lesser Canadian dollar in exchange for US dollars. So there is a risk of currency movement that also be considered into your yield when you calculate the yield investing in these ETFs. We have reached to a point now to compare the performance of all four ETFs: XYLD, JEPI, XYLG, and VOO. XYLD's net assets as of 21st July 2023 is 2.9 billion. Expense ratio is higher, and it should be higher because this is an active fund that writes covered call options. So expense ratio, or the MER, is 0.58, 60% or 0.6%. NAV $41.42. NAV means net asset value. Price as of July 21st, 2023 was $41.37. So you are getting a little bit of a discount to purchase XYLD. Beta is 0.58, and as you know, beta means that if the market total index increases by 10%, this fund will increase by 5.8%. So that means beta, the responsiveness of the fund against the movement of the market conditions. So total return year to date in 2023 is 11% in 1 year, so from the last year 2022, July 2022 to July 2023, average return 1 year is 5.6%, and the return 3 years 9.9%, 5 years 6.9%, and daily total return over 10 years is 6.8%. So this is, you can see, is a total return is less, although the yield was higher for this XYLD fund. Second ETF, JP Morgan Equity Premium Index, JP, net assets 27.9 billion. Expense ratio is way lower than XYLD, 0.35%. NAV is much higher than XYLD, $55.4. Price as of July 21st, 2023 is $55.9. This is a little bit of a premium you have to pay to have a share of JP. Beta is 0.62. There's a bit more volatility in JP that could give you a little bit more growth. And that's why I see year-to-date return, daily total return is 6.3%. Daily total return 1 year, 10.8%, which is higher than XYLD of 5.6%. And daily total return 3 years is 11.9%, which is again higher than XYLD 9.9%. And this is actually a newer version of JP Morgan, so we don't have data for 5 years or 10 years. It's only 3.5 years old ETF. So that's what JP has to offer. XYLG is a very new ETF from Global X ETF companies. Net asset is only 60.3 million at this time. Expense ratio is 0.60. NAV is 28.3, and the price as of July 21st, 2023 was $28.20. Beta, we don't have information yet about this beta because it's a very new fund. We haven't had long-term historical values, so we cannot do any econometric studies. Year-to-date return is 15.1%. 1 year return is 10.7%, which is higher than XYLD but closer to JP. And 3 years we don't have information. 5 years we don't have information. 10 years we don't have information. So XYLG is a new brand of Global X ETF company. You make your own decision and see if you want to invest in that type of ETF. Finally, it's VOO, Vanguard ETF. Net assets 88.7 billion. Expense ratio is very, very low, 0.03%, which is very obvious because this fund is a passive fund. It's not an active fund, doesn't do any covered call contracts or activities. So that's why expense ratio is very attractive, 0.03. NAV is $417. Price as of July 21st, 2023, $450. $15.60. So you are buying it a little bit at a discount price. VOO available beta is 1.0, means it tracks the market movement. If index increases by 10%, ETF will also increase by 10%. Year-to-date return, total return year-to-date is 19.7%, and over 1 year period is 15% total return. Daily total return for over 3 years is 15.4%. Daily total return over 5 years is 12%, and over 10 years is 12.4%. So, lots of return, very little dividend, very little yield. So, choice is yours. You want to go for total return or you want to go for more yield. If a person who is interested in VOO can easily assume that over 10 years, the average annual return or average daily total return was 12.4%. And if it replicates the history in 10 years, you double your initial investments. So hope you like this all detailed analysis, all the research, everything. As I said at the end, that if you like the video, please share it, subscribe my channel, like the video, write something on the comments, and also let me know what more you want to have about these stocks. We'll see you in the next video. Till then, bye bye.